Well, good morning, everyone. Don Cramer with the Cramer Group at Urban Nest Realty. Cheers to you this morning. Happy Wednesday. Welcome to episode 134 of Coffee with Cramer. Again, I'm Don Cramer with the Cramer Group at Urban Nest, and today, as we do every Wednesday, we go over the stats as to what's going on in the Las Vegas housing market. So that way you have the news and data and information you need to know as to what is best regarding buying, selling, or investing in Vegas real estate. So we got a few slides to go through. Let's dive in and get started. So this week of 5/3, May 3rd, first week of May, we start off with 2,156 single-family homes available for sale in the Valley. Now that's up a little bit from last week's number 2134. And of the 2156, traditional sales were 2,148 listings. Short sales are 4 and foreclosures are 4. So really no real big change there. Now, under contracts, and I want to explain a little bit of why this number is a little different this week, is we're down this week to 4,107 properties versus 4,301 from last week. Traditional sales being 4,022 this week versus 4,213 last week. And then we have 69 foreclosures this week, and 69 short sales this week, and 16 foreclosures. Median home price still holding steady at $363,000. Now we're probably going to update that as they wrap up some of the data and stats from April as we move further into May, but we're into the 360s as you can see. So why is that under contract? Why did we drop down almost 200 homes at 4.5% drop? Now that's probably looking at a month change, being as we've got part of the week in April, part of the week in May. So a lot of houses probably scheduled that were closing last week Friday that were affecting. So if you look at the 7-day trend, which we're going to throw up here later, you'll see sort of how it's just going over the period of 7 days. But that drop really is not showing any indicative signs of demand slowing. It's just a week over week change or month change. So let's kind of take a look at this last 7 day window here real quick. So as you can see on this slide here, we had 646 new properties go onto the market in the last 7 days and 140 back on the market. So the combined total is 786. Now, when you compare that to the under contracts, how many houses we put into contract, we had 236 for show and 761 for no show, giving us a total of 997 properties. So again, over a 7-day window, 786 versus 997. So a little over a 211 unit gap over a 7-day period. And then you can see the solds there were 932 properties. So again, as you can see there over that 7-day window, which kind of takes into account the overlap, the demand is still moving in with those properties going into contract. And we can still feel it because in May, we're writing offers and we're still in a very competitive market across many of the price points. And we're pretty much in almost all cases dealing with multiple counteroffer situations, unless we get into sort of the top of the market, that above 2 million. I mean, even 1 to 2 million price point, which is I haven't seen it. And from what I understand, even those that were in the real estate back in the Great Recession didn't see it above $1 million being this on fire, this hot. So as you can see, we're still dealing with a high degree of demand from that data slide. Now, if we go again into the slide which shows by price point, you can see just how much demand is outpacing supply, especially in that core market. In the under to 250,000 single family home price point, you're looking at 73 for sale versus 254 under contract. The core segment, 250,000 to 500,000, 2,956 homes for sale, 2,861 under contract. That was probably the larger drop week over week because of those closings. This 500 to 750 price point, you have 411 homes for sale versus 609 under contract. 169 homes available for sale and 203 under contract, and that's that mid-luxury segment. That's $750 to $1 million. And then in the $1 million to $2 million price point, 164 available for sale, 143 under contract. So not even a 2-to-1 supply. I mean, we're almost near equal houses for sale versus houses under contract. And then over $2 million, 166 homes available for sale in the Valley versus 76 under contract. So as you can see, with the exception of homes over $1 million, more are under contract than are available for sale. And we're putting some data and some slides together for an upcoming episode we want to talk about and say both at the macro national level and then the local level here in Las Vegas, is this going to be around for a little while? And what are the factors that may accelerate that or maybe accelerate and maybe even, lesser inventory or higher demand? And then what may be countering that effect that may tamper demand or increase supply. So we're going to be talking about that in an upcoming video, which we're putting some information together on. And then lastly, this is from the beginning of the year. So as you can see in the overall trends in the active available for sale, we've been still bouncing off of that low 2,000 range, and so we haven't seen we haven't seen inventory above 2,200 properties since February 22nd of this year. So we're almost approaching. We're 2.5 months. We're getting ready to get to month 3 on that. And then secondly, there's that under contract down to 4,107, little week over week dip there. However, it's still going, as strong as it's been almost all the way since the beginning of February. They were back on Feb 8, where we had 4,113 properties. Now, we are into May, and we're going to keep an eye on this because last year with COVID, May, in June, which normally constitutes the big selling season, school's out, people are moving, things of that nature. That didn't quite happen, so we didn't get that rush of properties onto the market. This year, we're going to want to see if that maintains, or do we see something more normal like we saw like in 18 and 19, or do we see something in between? My guess is we probably see something in between. So, unless we start if we start seeing homes in the 700 and 800 range coming on for sale over a 7-day window, that's going to be a good thing. That's going to add to some of our supply. However, if you're still seeing demand there, demand is still outpacing supply. So in order to start building our inventory levels back up at our current demand rate, we have to be adding 1,300 homes a week. I don't think we're going to quite get there yet. Some people, we're just really starting to get underway with the reopening of Las Vegas. A lot of people have moved here of late, the last couple of years, so we're going to kind of see how that continues to play out. We still have people migrating, things of that nature. But I think we're going to see a summer that's probably a little closer to what we typically see in our housing market, but not fully there. That's probably a 2022 situation. So I'd love to hear what you think. Definitely do us a big favor. Put it in the comments below. If you're checking this video out on YouTube and like what you see, hit the subscribe button. That way you can get notified, and hit the notification bell. That way you can get notified on our latest videos, because we like to go over the stats and details and also some things of what's, just news and that you can use about real estate in Vegas. So again, on behalf of the Cramer Group, I'm Don Cramer. Thanks for tuning in to the weekly update. Have a wonderful day. Till next time, take care. Bye-bye.